Martin from Secrets, the channel for learning about trading and investing. Welcome to weekly stock market analysis show. We try to understand what happened in the previous week in the stock markets and from the technical charts point of view, and then try to plan for a better trading week that is ahead, that's starting from tomorrow, December 18th, Monday, 2023. So if you're not subscribed, please subscribe and share to your friends and colleagues so that it reaches out to max. Thank you. So let's get into the charts first. Begin with, this is a weekly view of the Nifty and the Banknifty, left side Nifty and right side Banknifty. Right, you can clearly see that it's multiple flank breakouts and a cup and handle breakout that's ongoing. The rally is it's in the middle of a rally. It's breaking out. Look at the candles, both indices. So that's about the price patterns. This shows the price is well within a parallel trend line channel on both indices. And here the daily view gives you an indication on how the breakout big time is happening from the previous consolidation. Is very much clear. Now coming back to the candles, look at that candle. Right, it's a wide range bullish candle on both the indices. Not just the first time. Last week we had even bigger wide range bullish candle with a gap up. This week it's another vertical up move breakout from the 21,000 kind of levels. It's now 21,500, very close to that, and then 48,000 is it's above that. Managed to close above 48,100. So that's the kind of weekly candlestick is absolute wide range bullish candle. Now daily candles are showing that Friday we had another bullish wide range bullish candle on the Nifty, and the Banknifty also it's wide range. Right, and it's a gap up that's seen on Friday on the Nifty. So ferocious up move. The market is on steroids. That's the kind of moves. But make a note that we had that breakout that happened on the last two trading days. That's Thursday and Friday on the expiry, and then the Friday. But before that 7 days, it was moving in a very narrow range of around 200 points and 1,000 points on the Bank Nifty. But it's on Thursday on the expiry that it broke out. That's following the Fed interest rate retaining the same and then forecasting multiple rate cuts, more than it's around 3 rate cuts on next year. So that was taken very, very bullish positively, and market shot again. Remember, we had the initial breakout that happened when the ruling party swept many of the states elections, and that outcome was little surprise, and market took it very, very positively. And then after that it was consolidating for 7 weeks since it had already reached the big rounding number of 21. Now this second big event or big breaking news came when the Fed went to more dovish commentary. So when that happened, it's a second breakout that's happening in the December. 2 breakouts, big mega breakouts, and the candlestick is showing wide range bullish on weekly and daily. Look at this Bollinger Bands. It had been rising up, expanding since the first breakout, and then it was walking on the bands, slipped down from the bands, and then climbed back with the bands on. Still expanding. So the prediction is, as per the Bollinger Bands, is that market is expected to move more further up. But you have to keep in one mind, there is a median, 20 moving average is a median for the Bollinger Bands that you see on the daily. And so the further you move away from the Bollinger Bands median, the more it will be attracted back eventually. The further you move, the larger the probability that it gets attracted back towards. So correction can be a possibility that you can study from this. But otherwise, Bollinger Bands expanding upside and walking on the bands is extreme bullishness. Now, before we get to the support resistance levels, let's go back and then summarize what exactly happened. So it's a continued breakout. It's a breakout that consolidates for 7 days, and then it's a continued breakout that happened, and new all-time high every single day. New all-time highs are forming, and now we have an all-time high that is at very close to the 20,000, 21,500, and it's heading towards 22K. The close is 2.32%. That's 486 points in a single week. And from the previous week, from the last 3 weeks alone, 1,658 points, 8.4% happened just 3 weeks. This is something that happens in 1 full year probably sometimes. So that's a bullish wide range. And from the previous swing low, it's 14% up now. And the previous to previous, the major swing lows from the rally started is 25% up. Remember, the correction was only 10% after the 25, after the 20, and then from the 20 it corrected around 10%, and then it slide another 14%, and now the total 25% of rally is what you're seeing there. It's breaking out of the cup and handle and the flag patterns and all that. Bank Nifty is also same, continued the breakout after 7 days of consolidating after the initial breakout, and then now from new all-time high. It's about the 48,000 heading towards 50k. It's it's around 2%, 882%, 1.87 to precise move this week alone, and it's nearly 5,000 points, 11.35 in just 3 weeks. Can you believe that? It's a 25% rally from the previous major swing low from where the rally had actually begun following the inflation rate of US cooling down. So December has been ferociously moving markets as if it is on steroids, is what you're seeing. The daily candle close was 274 points. It's 1.2% Friday. Big close we already seen that, nearly 1% Bank Nifty likewise. So again, so drop out from the So the question now is, how much more steam is left if at all something is? How quick, how big these corrections could be? These are the questions. Would it go and consolidate for some more time before further moving up, or would it, now that it's overdue of correction, it may come down? You never know what is, right? Small bands, we already talked about that a lot. Let's get to the support resistance levels and see what is. So what do you see the 7661 and all? This is Fibonacci extension that's used for projecting or extending how far it can move up. We had done that from the previous swing highs from here, and it showed that a full swing breakout could happen at 61,000. It's near less than 21,000, but that's all gone history. Now it has hit 78% Fibonacci extension. That means it's on the top of a channel as well. It's there. The correction can come in any moment. That is what it indicates. So the first resistance would be to take out the all-time high. It's near 20 and the 21,500, and after that 22 will be the next stop there. Right? This one's downside support first come in with a gap at 21,210. Then 21,000 can be a good support. Then there is Fibonacci retracement 23.6 that comes in between 21,000 and 2,800 or 2,900, that range. And then there's another gap that's coming at 2,700. Then there is a 20 exponential moving average that's coming at 2,600, 25,632 to be precise. That's where the 20 exponential moving average can be good support. Right? After that, there is another gap that's coming at 2,300. I think that should be fine for the coming week. That's where the good support will come in. So multiple gaps, moving averages, all the Fibonacci retracement levels and all the tracks supports as the supports on the downside. Resistance, it's unknown territory, only Fibonacci extension, and it's all that, and it's all that we can use primarily. Bank Nifty, if you look at the resistance similar to the Nifty, first we will take out the all-time high at 48,150 levels, and then every 100 points you can find resistance, because it's already hit the 78.6 Fibonacci extension from the Bank Nifty swing low. Right, it's unknown territory. Right, Fibonacci extension also is over, so it is due on the top of a channel, on the top of Fibonacci extension. It is due for a correction for sure. And the first support that can come in could be the previous candle's low, right, so at 47,500 zones, and then the major support would come in at 23,600. That's coming near to the 46,500. That's where the gap support is all coming. We have Fibonacci 26, it's coming at 46,800. 46,800. Before that, you are rounding numbers. Now it's at 48 to plus 143. 48,200 you have the all-time high. 48,140 is what it is. So 48,000 would be a major thing to hold on. So if 48,000 is breached, then we have trouble. Then 47,500 could act as support. 46,800 Fibonacci 23 as support. Then 46,500 gap can act as support. After that 46,005. So 46,000 is the major support that's called. If at all there is a major correction that's coming in, that's the 20 exponential moving average. If that is breached, then it goes to 45,800, 45,700, and then 45,300, where you have 100 exponential moving average and a gap and all that is coming. So 45,000 would be the major gap. After the 46 is the major support. So that's about Bank Nifty and Nifty level support. Let's move ahead and see what's momentum and the trend indicators. You're using the RSI and the trend indicator plus ADX. These are used to understand how the market's momentum and trend is, and this is analyzed based on multi-time frame. That's weekly, and the left side is weekly and right side is So it's Nifty and Banknifty both we are analyzing. So there's nothing much to say. Very simple. Its momentum is bullish extreme. Trend is bullish rising extreme. Simple. On both time frames, short term and long term. Trend rising up, bullish trend. Crossed our BMI positive, positive. Both time frames, both realizes. Very quick and fast, right? Let's move on and see the volatility. So the major fear and greed index is what is causing the volatility is India week. Since India, what's causing the sense? India week is all about measuring the fear and the greed. It's all about volatility. Right? The calculation is what the fundamentals of volatility. So 13.3, it spiked up 5%. The market is moving big violent moving of up to 8 to 10%. Big moves are happening and which is simply spiking up instead of having to cool off or go back to the 10 or 11 levels. It's just heading up 12. For the last 3 weeks, if you see, every time market is making big gigantic breakout moves from the election, the VIX has been spiking. Only a small cool of 3-4% came in between. Otherwise, it was all week to week basis. It's just spiking up. It's just spiking up. Look at this. From the 10 nearby levels, it keeps on spiking. Very few cool off has happened at all. So which is something that shows that there is fear in the market of a different nature now. Although the election fear, the election outcome fear or bullishness or election or the Fed, all these uncertainties are gone now. The outcome is clear now. Direction is clear for the market is breakdown. Now the VIX is rising because of the fear that corrections may be due. That's what you see, I believe. So you have to be extremely cautious. Now there is a difference between the implied volatility, the actual VIX volatility, and the realized, the actual one in trading. If you see, so that difference is between the 30-50% which indicates that it's in favor of the selling on the Nifty. We are all right. And coming to the open interest of the Nifty shows that it's a long build-up, absolutely long build-up on Banknifty also. So bullish for sure is what futures open interest. So now for the options open interest, the PCR put call ratio for the December 2021 weekly expiry is showing that put call ratio is extremely bullish, 1.46, 1.13, and Nifty and Banknifty respectively, right? So be cautious. At the same time, you can read that it's all bulls have taken it over. Now look at this, how the options are written for the next week of 20th to 21st December weekly expiry. You can see that it's dominating on the red side. That's the put side. Put writing is dominating. But on the Bank Nifty, you have the call writing also having the highest number of calls. That's dominating Bank Nifty. Nifty absolutely a dominance of those levels of the highest put and call writing is 21,300 and 22,000. That's a 700 point range. So there are people who bet that the supports, so the resistance can come in at 22,000 only, another 500 points, less than that. It means 100 points nearly. There are people who expect that it may fall, it may correct, but not more than 200, couple of 200 points. So that's where it is. Not a big wide range, but yeah, that's where the highest put and call writing is seen. And second highest is 21,200 and 21,500. So very narrow range. That's how the betting is happening. People are extremely bullish and put Banknifty 47,000 and 50,000. That's just 3,000 points. Big violent 5,000 plus kind of point move is what is happening in a few weeks. So just 3,000 points is not a big deal. And that's what option call writers are seeing. Option put and call writers are seeing. So 3,000 point range of 47,000 highest put writing and 50,000 highest call writing. Support resistances 47,500 and 40,000 is next level of highest narrow range. It's next level of highest put and call writing. So overall, no doubt, levels are clear. Make a note of this. Correlate with the retracement levels and then play the game. Let's try to understand the industrial sectors, the various sectors that contribute maximum to the indices, right? Those are listed down here: IT, the metal, auto, pharma, FMCG, and the realty. There are many other sectors, but this is what the primary index moving sectors you see. So look at that. IT has made a 7% week. 7%. Can you believe that? Metal 5%. Realty 3.5%, FMCG 1%. The only thing that is flat and negative slide flat, but yeah, it's not 0.2, 0.12, it's plus 0.12, I believe. It's very flattish, right? Pharma was only flattish, but otherwise it was momentum on short term as well as medium term. That's daily and weekly. Both are bullish, rising from the momentum perspective. Absolute bullish rising on all, and moves are big in IT and metal, 7 and 5 kind of. Pharma had small, but pharma also is in bullish momentum only. In the bullish, it is false flat. That's all. So momentum wise, it's absolutely bullish. Long positions can be taken is what the chart is showing. That's about the sectors. Look at this. IT made the big breakout. It's a gap resistance here that was long pending from where it had fallen down and then consolidating since many years, couple of years, more than that. Now it has taken out that, and that gap is history now. It's breaking out with violent 7% single week. Look, this metal, it's in a parallel channel. It is having a head and shoulder breakout. That's confirmed. So chartically, momentum also is bullish, trend is also bullish. So chartically, metal shows that it is long way to go till the top of the channel. Auto, at the top of the channel, had broken out, bullish momentum rising on both indices, trend rising, absolute bullish. Now that it's at the top, some caution may need to come in. Pharma had broken out of a flag pattern long back and then consolidated. Once again, from the truck angle, it has broken out. Momentum is still in the book list while all this was happening. Trend is also bullish. FMCG heading towards some more space that's on the top of the parallel channel where it is, trend line. Momentum is bullish, trend is bullish. Right? All at all time highs. Reality, some more space, little more towards top of the channel. Bullish, breaking out all time highs, momentum, trend, both bullish. Absolutely. Let's try to understand the heavyweight stocks now. Right? That's FIA favorites, and that's where the things happen. That moves them indices, not other things. Right? So this was where the lag was all about. These sectors, once you start moving, that means FIs are coming, pumping big money. Big money is coming. That's what it means. Now it's moving. HDFC Bank has climbed into bull zones on the weekly after a very long time above RSI 60, and it is almost still it's in the consolidation. If you see, but look at this last 3-4 weeks. So big, it has moved in par, but the market has moved, but still it has long way to go to say that it can take out 1,700 in the all-time high levels, and then imagine what would happen if the HDFC, the largest 15% or something, largest contributor of the index, is breaking out ferociously from here. The market can go to 22, 25 just in few days. That's a kind of giant stock. HDFC is. It has been underperforming. It's a long time consolidating in the range. Now things have started happening. It looks like sustain the momentum will take some more time. You never know. Let's consolidation still at not an all-time high. Retrieving. Momentum's climbed back in the bull zone. So these two are the sharks. This is where the FI money is falling, and they have broken out and finally climbed back in the bull zones after having slipped into even the bearish zones in the case of HDFC. Lines has been consolidating. Now it took the base support and then moved consistently, and now there is a resistance in the upside with all-time highs there. Both HDFC and the lines. That resistance is up there, but climbed to the bull zones, has recovered. Now a breakout from here, and both of these could mean 25k. That's the kind of move that will happen. If it will happen, it never happen. You never know what's happened, or it will take another turn or one more turn to go down and then come back. You never know that. HDFC Bank, ICC Bank was always bullish. Little decent correction, well within the trend line channel. Broke out, made new all-time highs. Always bullish after having slipped earlier. So all three are giant stocks that contribute to the actual index, and all three of them have been heavily bought by the Fyers. Heavily bought, and they are all in the very close to the all-time highs in the case of Reliance and HDFC, and new all-time highs keep getting made in ICC Bank when it recovered from the mild correction for 4 weeks. Infos IT had the index had broken out. Infi also had broken out from that flag kind of parallel channel breakout. But remember, there is resistance out there. Clearly, there. Keep a note of that. If that is cleared, then Infi can recover all the losses that it had been made while the correction was happening last many years. Look at this TCS. It's more bullish than Nifty, and momentum is climbing the bullish zones. Trend is also bullish, and it is a flag pattern and breaking out and heading towards the all-time high very close by. Chartically looks much stronger as compared to Nifty because there is no resistance as seen on the Infi. Kodak Bank, surprisingly, it's the only heavyweight that is remaining in the non-bull zones, in the sideways zones below the RSI 60. So that is still consolidating, and that has been its nature forever. It never breaks out. So that is Kodak Bank, but still it's a green close. ITC, the giant, another giant stock, has been consolidating after making big all-time highs earlier, facing some kind of resistance, but still made in the bullish momentum and managed to climb back last week. It is bullish, trend is bullish. That's about the 6-7 Hrithik stocks that contribute maximum to the index. Let's get to the institutional participation. That is the most exciting news to talk about. Institutions have been buying big time. Look at December 18th. How much they bought? How much they bought? 9,200 plus crores in the cash market, and he has booked the profit of 3,000 crores. That's the kind of buying that's happening for the Fyers. This is what we always wanted, right? Big time buyings, and total 18,858 crores were bought in last week alone. Remember, we had 17 consecutive weeks of selling earlier to that. So 5 weeks alone, 20,000. Big time buying is happening, and last week alone it's nearly 20,000 crores in the cash market. And domestic institutions obviously last week sold 2,500 nearby crores in the cash market. Net longs were actually flattish or actually down last week on the futures, on derivatives, right? Net longs. And from the Fyers sides alone, we'll talk about. Let's talk about global markets. We'll talk about the currencies, the global commodities like gold and crude, and then we'll look at the US markets as well. These are the major global clues. Comprises everything. So, starting with dollar, it's down. It is cooled off 1.4%. That's a big cool off. Look at this right side. US dollar had a cup and handle breakout. Now it is at the neckline back. Fallen, slipped the neckline. Still not fallen to the bear zones, but the sideways and falling. That means dollar is cooling off. It's good for at least for our markets. It's 102.6 now, right? Sideways momentum. USD and our currency pair. It had been in that top of the wedge, not able to break out, neither able to crash down. So it was in that situation for a long time, and now a 0.5% down move has happened last week, 82.90. But still, rupee is at the weakest point. Anything would happen here. A breakdown from here would be good, but it may continue to consolidate because as long as it's trying to break out from that, there is central bank intervention and stop there. Neither is it falling down either. Right? Now that it has fallen down 0.5%, people may hope that it may come back to the 80 levels at least after a long time. Right? That's what the hopes all lies on. The currency rupee has gained bit, but still at the lowest, among the weakest of the weakest points. Crude oil. Here we have crude oil with a cooled off, big down move has happened. It is in the bear zones from the momentum perspective. But a green close happened last week after it slipped slightly. A green close above the trend line. So it's a 0.73, small down move. Small up move actually. It's a mistake. 2.5% up. Right. So crude oil is slightly moved up, but otherwise it's in the bottom. That's what I'm trying to say. Gold is actually flattish, kind of flattish. Remember that gold had broken out and made new all-time high at $22,150 per ounce or something, and then it fell into the profit booking and resistance, and then fallen down. Started to breach down from here and go back. Another consolidating basically. Slipped in the sideways, again trying to come up. So that's a kind of it's a cup and handle rounding by and breakout, but that breakout did not sustain due to some reason. Probably it may consolidate some more and then make another big move. No, right? So that's about gold. The US markets coming to the Dow Jones made new all-time high, wide range bullish candle for 8, 10, 8. How many weeks is that? 7 weeks consecutively, and now finally breaking out and making all-time high. Finally, it is ascending wedge. It is broken out well. Descending wedge basically. Nasdaq did not make the all-time high yet, but look at the candle, wide range bullish breakout from the descending wedge. S&P 500 descending wedge breakout, not at made all-time high. Momentum bullish, trend bullish, all indices. So here's extreme bullish in green is what you're seeing there, right? Just to wrap up once again, dollar has cooled off, rupee has gained a little bit, crude oil is cooling off and then consolidating, gold is again consolidating after making all-time high. US markets green. So no problems in the global equities as of now. Let's get on the stock picks for the actionables for the next week. National Aluminium, very good dividend paying company. Look at the charts, look at the volumes, big volume breakout. Momentum climbing into bull zones, breaking out, trend rising, bullishness, and we have very close to that gap resistance out there. Be careful on this gap. Make the entry only after this gap is clear. Otherwise, this is not a trend, not trade, and the reward can be beautiful towards the all-time high and much beyond that. But just be patient for that. It takes this gap. Gaps can be very dangerous. Look, we are almost at the top of the parallel trend line channel. So it could take another bow move and then consolidate. It could happen. So very careful. But very big volume breakout move with momentum and trend rising up is what you're seeing there. National Annuilium or NALCO. Good dividend paying company for Persian trader. It's worthy. State Bank of India, the biggest bank, public sector bank, and has climbed into the bull zones once again, and the trend is also rising up. A lot of space more towards the top of the channel. Right, has been consolidating. Last 2-3 weeks have been bullish from 550 levels. It is now 650, 100 points gained in 3 weeks. Big gigantic white red bullish candle. Momentum climbing up. Volume above SMA and breaking out. And trend indicator ratings also rising up. Bullishness. State Bank of India long trade and NALCO, National Aluminium long trade. These are two stock picks for the next week. No, but these are not trade recommendations, but for learning purpose. And we have one more action for next week. This is a Batman strategy with completely hedges on both sides. Batman gives you a small profit if the market moves in the range and give highs if the breakout happens on either of the side, and gives all a very wide range. Look at this, 21,000 and 21,900, so about almost 900, 850 points there. That's a range which is beautiful, right? For a week, for just a weekly strategy, remember that. And the RiskReward may not be that great, but reasonably if you're exiting once you're getting 1 to 2%, right? So that's how it is. So basically you're selling at an OTM and inside hedging with buying inside and taking outside hedges also. That gives you a Batman strategy on the Nifty weekly. That's what you're seeing here. So that's it. Let's just wrap up now that we've seen a lot of things. Market walk out once again. Second breakout as we have seen. After 7 days of consolidation, with new all-time highs, and it is definitely a vertical move, right, of 7 weeks non-stop. So no major correction. There was a consolidation center that happened. That's all. 7 weeks it has been breaking out, but literally. So it's a 25% rally. If you look at from where the inflation is down, news came in the US way back in December, beginning, right? So 25% rally from much beyond that. Sorry, December was this breakout thing, but the rally started even before that. We are talking about the second previous swing low. So that's a big. So green US candles for 7 weeks, 5 weeks of FI continuous buying week to week basis. Crude oil cooling off. Index and momentum indicators on the charts, both indices climbing. Bullish price action everywhere. Low VIX regime still, so about 13 plus, but still below 15-20. So it's okay. Bullish OI, open interest, put call ratio, futures open interest, long built up, bullish. Expanding bands on the upside. All this gives bulls hope that this rally is not going to stop here. It can stop. Only at 25 people can think like that. Logically, the charts are showing that. The VIX is cooling off. It's not cooling off. That's the thing. Sorry. VIX is not cooling off despite the fact that market is moving 11% back, like 8 to 11% of big moves happening over the last couple of 3 weeks, and then VIX keeps spiking up. No major pull off. So that's it. Signal that it's overheated. It won't happen. Lower cycling. I mean, the Fibonacci extension 78. That's also extreme. Fibonacci extension projection towards the future. That move also has finished. So that gives bears a hope that now a big correction will be definitely coming in immediately. So the market has broken out, basically, to summarize, without major corrections. So there will be chances that there is some fall-off in the gap after particular moves. But otherwise, market is bullish for sure. And the question is, how much more left? If left steam is there to stay in the top, how big and quick can be the reversal that can come in? That's the things that comes to the mind. Right? So the market technically views bullish, no doubt about that. But mild bearishness and neutral views coming in because of the fact that such gigantic moves have happened and it has to have correction. So expect that. So that's what my view is. Global cues, recession fears, inflation, interest rate, and all these worries are cool, but we can come in and create black swans on the anytime. You can wipe out things, and that should be wary of that. Now, for the levels for the next week, Nifty is 21,000 and 22,000, very wide range. 46,500 and 49,000, even that's also a very wide range that you have to look out. That's all you can say because that is the kind of move that's happening on the upside. So as long as it's 21,000, now it is 20,500, but 21,000 is 40,000 is maintained. That means it may be consolidating before it can break out and take out the 22, 23 and all that. But if that is breached, then it's a major correction that's coming in on the ways what we would expect. Now, IV implied volatility and the realized volatility spread the difference is in favor of the option sellers that we already talked about. Right? So always use hedge positions like the strategy that we discussed earlier here, so that you know what exactly you will lose if at all something wrong happens to your view to the market. Always have that, and don't play the game of naked selling and and it will wipe out your capital. Right? So also you can use this time for moment investing, but not value investing. So if a dip is expected and dip is coming for every small dip, do a SIP and buy quality stocks. That's the way you make money. So that's an opportunity that may come in if a dip comes. If the trend is positive, the market direction is very clear, but I have to be a little extreme caution because of the fact that it's on the top. Right? So option trading can be used. You can have call cash record puts, cash record puts, and covered calls, and all these strategies can be applied when the market is even whichever direction it is going. So option strategy can be used to get rental incomes also, in addition to other strategies that we are using to make money. Right? So as I protect your capital, VIX is spiking. You have to be cautious on that. Market is on the very top after big vertical moves. Q's corrections are due, but market you know that it is upside, nothing but upside. Market is just moving on steroids. That's what is happening. That's what I have for the week. So if you're not subscribed, please subscribe and share to friends and colleagues. That benefits all. We have other social media channels where we post, intraday and every trade. There are a lot of technical charts and analysis details are put in there. Subscribe to them if you want to be sort of new to it. So more important, subscribe this video if you're watching this without subscribing. Please. Thank you. Have a great trading week ahead. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.